Okay, so we're going to have a look at the past exam paper for incomplete records. It's a 2015 question 7, A. Murphy. It's type A, so there's two types for the incomplete records, type A and type B, and it's for 100 marks. The first thing you need to know are the 7 steps that you follow when you're answering this question. So the first one, prepare a statement of capital. Second, prepare 2 control accounts, one for your debtors and one for your creditors. Prepare a cash and a bank account. Calculate your total sales. Calculate your total purchases. Those two figures will be taken from your cash sales plus your credit sales to get your total sales, and your cash purchases plus your credit purchase to get your total purchases. Adjust for any loans and investments in the question. And then step 8, then adjust for any other expenses or gains that you might have in the question, like prepayments or due, anything like that. So the first, step 1, you're going to prepare a statement of capital. And all of that is looking at the start of your question, seeing what your assets are, see what your liabilities are, see how much we paid for it, and the difference then would be your goodwill. So in this question, we'll have our assets, so we'll have your premises of 180,000, you'll have stock 17,000, you'll have debtors 18,000, you'll have 3 months premises insurance prepaid of 1,200, and then you have your cash of 400. They're all your assets, and you add all them up together and you'll get 216,600. Then you look at your liabilities in the question. We've got 2 liabilities here. We've got your trade creditors of 22,500 and your wages due of 1,800. You add those two together and you get 24,300. So we've got our assets, our total, which is 216,600. We got our liabilities total, which is 24,300. So you take your liabilities away from your assets and you get your net worth then of 192,300. You'll see in the question that we paid 220,000 for it. So the difference is 27,700, and that's your goodwill. And that goodwill goes in your balance sheet underneath your fixed assets section. So it's your net worth, take away the amount that you paid for it, that's the difference, and that difference is your goodwill. The second step we have then is prepare 2 control accounts. So we need to have a control accounts for debtors, and we need to have control accounts for our creditors. So first thing, we have a look at the start of the question, see if there's any debtors and creditors, and we do. We got debtors here and we got creditors here. We have a look down here during the question, so do we have any debtors or creditors? So we've got bank payments of creditors, and we've got debtors in here in our bank lodgements. And then we have a look at the end and see do we have any debtors or creditors, and we've got creditors here and we've got debtors here. So just going to put them into a T account and calculate the difference, which will be used to calculate our sales and our purchases. So in our debtors control account, on the first 01, we know assets are, we know that debtors is an asset, so go on the debit side. So we got 18,000. That 18,000 is taken up here from the start of the question. Then we look down through the question and see we got debtors here of 34. So we lodge, so someone gave us money, so we lodge that money into our account. So the double entry will be your bank and your debtors. We're receiving that money, so that's going to increase our bank. So you're going to debit your bank. You're going to decrease your asset, which is our debtors. So we're going to put on the credit side. So it's 34,000. Then we have a look down at the end and see do we have any more debtors. And we have debtors here at the end of 20,400. But also in this question, we also have goods in transit. So it mentioned here on the 31st of the 12th, 2014, goods with a sale value of 6,000, which had been sold on credit at a markup of 20% on the cost have not been recorded in the books. So that means that someone bought extra stock from us where it's in transit. It's been included in our closing stock, but it has to be included as part of our debtors. So we're going to have to increase our debtors. So at the end of that period, we're going to have a closing balance of 26,400. So that closing balance at the end, 26,400, goes on the credit side. It'll be brought down to the debit side for the next month. So we'll start the next month with debtors of 26,400. So what happens then is that we've got 60,400 on the credit side, we only have 18,000 on the debit side, so the difference will be 42,400. So you're going to take your 60,400, take away the 18,000, and you're going to get 42,400, and that's going to be your credit sales. So as I said, that figure is going to be used later on to help calculate the total sales figure. So you also have to prepare the creditors control account, and the figure that we calculate here will be used to help us calculate the purchases or the total purchase. So in here we've got our creditors control account. So we look at the start and see do we have any creditors. We've got trade creditors of 22,500. There's no creditors or liabilities, so it's going to go on the credit side. Have a look down through the question to see do we have any other creditors. And bank payments down of creditors of 42,100, so we paid our creditors. So that's going to reduce our creditors figure, so it's going to go on the debit side. 42,100, and then have a look at the end and see do we have what's our balance figure for the end of the period. And we see we've got trade creditors 32,600, so that's going to go on the debit side. It will be brought down to the credit side for the next month. So what we'll have here is we'll have bank 42,100, we have our closing balance figure of 32,600, and have a balance figure of 22,500. So you need to calculate what are our credit purchases. So you're going to add your bank and your balance on the debit side to get 74,700. Then you're going to take away the balance of 22,500, and that's going to give you a credit purchase then of 52,200. And then once again, that's going to be used to calculate your total purchases. After that, then you're going to step number 3. So prepare a cash and a bank account. So in here, we're just going to look at the figures we have for our cash, and we're going to look for the figures we have for our bank. Okay, so to calculate the cash, we'll have a look at the start of the question and see do we have any cash. We've got opening cash there of 400, so that's going to go onto the debit side of your cash account. You see here we've got cash payments, so you've got lodgements, general expenses and purchases. Those 3 will just go in as they are. So your lodgements of 110,000, general expenses of 45,800, and your purchase then of 86,200. They'll just go in as they are. Have a look to see if the Murphy had taken anything for personal use. So he's taken stock of 100 per week and cash of 120 per week for household expenses during the year. So you're going to take 120, multiply by 52, and you're going to get 6,240, and that's going to go in there for your drawings figure. And then have a look then to any closing cash, and that will be given to your figures at the end. So we see here we've got cash of 600. So our closing balance for cash will be 600. So you're going to add up all your figures on the credit side, which will give you 248,840. We got 40 on the or 400 on the debit side, so you're going to take that away from your 248,840, and that's going to give you your cash sales then of 248,440. And remember, that's going to be used to help us to calculate our total sales. Your bank debt. Okay, so for your bank, once again, you've got bank payment here. So you've got also your bank lodgements. So you've got your debtors, 34,000 cash, 110,000 dividends, 4,000. They all go in because they're bank lodgements. Bank is an asset. It's going to increase it, so it goes on the debit side. So bank 34,000, debtors 34,000, cash 110,000, dividends 4,000. Your bank then, your bank payments. So you've got creditors, like need, interest, annual premises insurance premium, standing order for charitable organization, and delivery events. So they're all going to go in as they are. So you've got your creditors, light and heat, interest, insurance premium, standing order, and VAT. Have a look in the question, because remember we have an adjustment here later on that says at step 6, adjust for loans and interest, or loans and investments. So have a look in the question to see, do we have any investments? So down here we will see that we have the capital sum was repaid in lump sum in the year 2022, and to provide for this the bank was to transfer 1,250 on the last day for each month from Murphy's business bank account into an investment fund. So we've got interest to be paid back here in 2020, so we want to put money aside for that. So we're going to put it into an investment. The amount of money we're going to put into investment is 1,250, and we do that by 4 months. Why is it 4 months? Because we got the loan on the 1st to the 9th, 2014. So we want to put money aside so we can pay for that at the end of the period. So we've got the 9th, the 10th, the 11th, and the 12th. So it's going to be 4 months that we're going to include there. So it's going to be 1,250 multiplied by 4 will give us 500 or 5,000. So what you're going to do is you're going to add up the debit side, add up the credit side, take one away from the other, and you're going to get a balanced figure. So we got a balanced figure here when we add up the debit, take away the credit of 50,600, and that's going to be your bank figure that goes into your balance sheet, and the previous one for your cash, 600, is going to go into your balance sheet then for cash. The next thing then we have to do is to calculate your total sales and your total purchases. So step 4, calculate total purchases, calculate total sales. Total sales is cash plus credit. So we calculate our cash and our credit in a previous step. So we go back up here to your debtors. We would have calculated our cash. So we would have calculated our cash figure for debtors, 42,400. And then as part of our cash account here, then we would have calculated our cash sales. So, sorry, your credit sales is 42,400, and your cash sales then is 248,400. So you're going to add those two together, and that's going to give your total sales to be 290,840. And that goes into your trading. You can, if you want, to do a little adjustment here for a closing stock here, because we do have goods in transit. Now you can do it here or as part of step 7. So your closing stock. So we'll see over here that goods with a sales value of 6,000, which had been sold on credit at a markup of 20%, had not been recorded in the books. So that 6,000 is 120%. So you find out what 100% was. So 100% of the goods that we bought, the cost price of them were 5,000. So you're just going to reduce your closing stock by 5,000 because we haven't received them yet. They're in transit. Step 5 then, you're going to calculate your purchases. So once again, go back up to your creditors control account that we calculate here. Your creditors purchases is 52,200. Your cash purchase then will be in your cash account and purchases here that we have of 86,200. That's what's taken straight here for your cash payments. So that's your cash of 86,200. You got your creditors then from our adjustment, 52,200. That gives you 138,400. And then remember that he's taking stock to the value of 100 per week. So it's going to be, you need to reduce that figure by 5,200, and that gives us 133,200. Okay, so your purchases are going to be reduced because this guy here, Murphy, he's taking goods from the stock, which is basically your purchases that you're going to sell on to get money from.